Even when they say that you trade the most negative indicator, sometimes it's not the right coin to trade because it may be the most negative, but it is still dropping. So make use of this knowledge. But if trading the most negative indicator is working for you, no wahala, you can go with that. Hello, beautiful people. So how do you manually select a coin to trade if no signal is given? You know, sometimes we miss out on signals. We are not online, we're busy people, and we need this money. Yeah, we need this money. So take note. When we are trading and signals are not given, we use indicators in most cases to choose a trade. But as we use indicators, except for the pivot point standards, we are going to take small profits of 1.5 to 2% because these are just assumptions. We've not gone to deeper analysis of the coin to get the real gist. And also, we are not using one indicator alone. We are using them in combination. So let's dive in. Come to Crypto Simplified. At Luganda Crypto Simplified, we give daily lessons on how to use your key software profitably and to the maximum. And also we help you understand cryptocurrencies at different levels. So today we are in Royalq and we are going to see how to use different indicators in determining when to enter and exit a trade. Remember, we say that all the coins that have to be delisted, even when it is promising and doing so well, it is very important and actually a must to stay away from them. But the good thing is Royalq has to prevent buying if the listing is imminent button, so it will also not buy the coin even when you want to do grade and buy it. So guys, let's see the first indicator. All right, indicators are just here. You just tap a coin and then tap I understand, and the indicators are right here. You see them? All these are indicators that we're going to see and get to understand. So we are beginning with an indicator called Bollinger Bands. Bollinger Bands. Bollinger. I hope my handwriting is good. Yeah, Bollinger Bands. Yeah, Bollinger Bands. That is NGER. Yeah, that's how it is. And we are going to use this indicator. Actually, it can help us to see the oversold and overbought areas. It can help us act as a support and resistance. And this indicator has a squeeze and bubble. And in most cases, we use this to know the market direction and determine to enter. And it is advisable when using these Bollinger Bands to enter like at this point when a candle opens below and closes above the Bollinger Bands. You get it? Now like this place here, it was a good entry because the candle opened and closed just above. And you see what happened? The market went up and later reversed like you see here. So guys, the other question you have to take is use a longer time frame to analyze, and maybe you can go to the shorter time frame to confirm the entry, but for analysis use a longer time frame, 4 hours and probably 1 day, but 4 hours can work. So we are in 4 hours here and I'm going to show you how to use the Bollinger Bands. Alright, so this is what we call a squeeze. After a squeeze, the market can either decide to go up or go down. But in this case, after the squeeze, the market went up. And it is not advisable to enter a trade when the candle is just hanging here in the middle. It is advisable that you enter a trade when the trade is either on this line or this line, because they're acting as supports and this is acting as a resistance. So guys, this is what I told you, that it is advisable to enter when the candle closes above the lower Bollinger Bands. Yeah, in most cases, the market goes up. In most cases, the market goes up. Even when there are manipulation and those other factors, but in most cases, the market goes up. So briefly, that is how the Bollinger Bands works. It has 3 lines, and these 2 lines here act as supports, and this acts as the resistance. It's not advisable to trade a coin that has gone above this upper resistance, because in most cases it has to bounce back. It has to bounce back and the market may get you up there. Alright, so that is how you can use the Bollinger Bands to determine market entry. I hope you got something. So you see, in most cases, after the squeeze, the bubble comes. After the squeeze, the bubble comes. Let's look at another indicator, which is the volume indicator here. we are seeing the volume that is trading. We are seeing the volume that is trading. And if you have a long red candle like this, it means there are a lot of sellers in the market. And then you see here, the selling volume was high. You see here, there was selling volume, but it was low. It was low. Yeah, so green is showing buyers and red is showing sellers. If the green candles are like this, like you see, they kept on increasing. So you can also use the volume, but the volume indicator here to determine market entry. You see here with high volumes, you can always enter and enjoy the profits. But once you see the sellers coming in, yeah, sell off everything and take off the profit you've collected. So that's how briefly you can use the volume indicator. Then we have the MACD. You know, I like the MACD. It is really good. It is really good and it never lies. So this is the MACD here. This is the MACD. It has the signal line and the strength line. And then it has this line. I don't know how they call it, but most people call it the zero line. This is where the histograms are formed. The histograms are these bars you see, the red and green bars. They form on the zero line. You get it? So the MACD has crossovers. You see these? It has crossovers happening, and in most cases when the yellow line is moving above the, is it purple or pink, is moving above the pink line, we expect the market to go up. I guess you can see it here. We expect the market to go up. And if the crossover happens in the green histograms like you see here, in most cases the market will go up, just like you see after the crossover here like this, the market went up but later came down. You see it, guys? Let's see another crossover. Let's see another crossover. So right now, when you look at the MACD in this case, it shows the market is dropping. Why? Because the yellow line is below the pink line, Each time you see the pink line being above, it shows the market is going to drop and it's not good to enter there. And if you see here on the histograms, you see that the sellers are dominating in the market. Let's see clearly. You see here, the sellers are dominating in the market. So if you enter here, the market in most cases will get your leg. So it is good to enter in like the crossover here, I would enter, but it was not that strong. So let me see where else you could enter. You see, okay. All right, so you see this crossover here, this one here. When it happened, the market went up. Yeah, it went up. So anytime you see the yellow line crossing above the pink line, it means the market is going to go up. When it happens in the red histogram, sometimes it will go up small, and then come down. And when it happens in the green histograms, like up this side, the crossover, that golden crossover I'm talking about, the market will go up very, very much. Let me see if I can find one. Okay, guys, so like you see this crossover here, it happened in the green histograms, and after that, the market went up. And if you look at the volume here also, you can realize that the buyers were taking over. Even when small sellers were coming, they overpowered them. And the market went up. So it's whenever it crosses in the green histograms and the yellow line is above the pink line, it is always a great time for you to enter the market and savor the profit. So you see, yeah, you see what happened? Okay, I guess you see it. So, and you see when the crossover happens, like in the red histogram here, like here, the market goes up, but not that much, even when buyers are there, but sometimes it's not that much. You get it? So each time you see a crossover in the green histograms, it's always a great opportunity for you to tap on it and make some money. And guys, when the pink histogram crosses above, like you see here, when it crosses above, the market goes down. You see here, the market was really down. Even the volume was very low. Sellers and buyers, the volume was very low, like you see here. It didn't even cross so much in the upper band. It was just ranging, you see. So those crossovers, they tell a lot. And also you can use the histogram volume. You can use the histogram volume. I don't know if you've seen that. Each time the volume is high here, the market goes up. You get it? And each time the volume is high here, the market goes down. So those are some of the things you can use on the MACD for you to determine the market entry. And guys, like I told you, the MACD is powerful. The MACD is powerful. You see, even a small crossover like here, the crossover was for some short time. I think it was around a day. It was around a day or some hours. But the market went up drastically. The market went up drastically. Guys, so imagine if you had entered here, you had seen this crossover and entered immediately. Yeah. You'd make money. Let me show you how you can use this MACD in your Royalq to set a trade. So we shall set as usual and then choose manually create as usual. Then we shall tap here on advanced options. Yeah, and then tap here on trigger price. Okay. Forgive the notifications, tap here on trigger price, and we are going to choose MACD. We are going to choose MACD. So after choosing MACD, you see it is talking of a golden cross. It's saying greater than 0 or less than 0. You get? So when it is greater than 0, when it is greater than 0, it means the golden crossover is happening in the green histograms all above the 0 line. You get it? And if it is saying less than 0, it means that we want the robot to buy when the crossover has happened in the red histogram all below the 0 lines. You see? Okay, if we tap this arrow here, you see it has both of them. It has both of them. The less than and the greater than. So when do you want your robot to buy? Do you want it to buy when the crossovers happened in the green histograms, or you want it to buy when the crossover has happened in the red histograms? When do you want it to buy? So mine, I want it to buy greater than. Yeah, greater than, like how you see I set it. And I want to use the 15 minutes time frame for entry. Remember, we said we are using the 4 hours time frame to analyze. Then we are getting our entries in the lower time frame. We just go in the lower time frames to confirm our entries. So after that, I'll save and then set my coin. Guys, I didn't set much on this coin because I already have my settings there. And then I'll activate, I understand, and create if I found it's a good coin. And when the crossover, the golden crossover happens in the green histograms, my bot will buy and give me money. Alright, so let's jump to how you can use moving averages to determine market entry. Guys, I'm just going through fast. In case there is something you need to know more, you can either rewatch, you just scroll back and rewatch, or alternatively, type your question in the comment section. Alright, so guys, this is the moving averages. I just get these indicators from here. You get it? So if I tap moving averages, it will disappear. If I tap again, it will appear. If I tap volume, it will disappear. If I tap again, it will come. MACD will disappear. Tap again, appear. So if you want it to appear, you just tap it once until it appears in your screen. So the moving averages, this is showing how the market is moving. We have 3 moving averages, that's 7. It is showing how the previous 7 candles have been performing, the 25 and the 99 in Royalq. If you ever find the market below this purple one, the 99, it shows it is on a downtrend. It shows it is on a downtrend. And if you find this, the smallest, the yellow one, the 7 moving averages down, it shows it is on a downtrend. If this is up, if this is up, the 99 downtrend, and if it is below, like you see here, it is below, it is an uptrend. It is an uptrend, like you see it right now. So here, as we're using the moving averages to trade, we consider 2 crosses, the death cross and the golden cross. You get it? So the death cross happens when a small moving average, for example, the 7 moving average, crosses below the big moving average. That is the 200, I mean the 99 or the 25. So that is the death cross. When a small moving average crosses below, it crosses below the big moving average, like you see here. Actually, this is a rainbow where they all cross at the same time. It's called a rainbow, and it can show market direction to the downside or to the upper side, guys. And when it happens, if it is to the downside, it will take some time there, like you saw here. If it is to the upper side, yeah, it is time to get money. So I want us to see a death cross. All right. So you see like here, remember the yellow one is the 7-day moving average, and that pink one is the 25 moving average. So you see what happened when the yellow one was below the 25 moving average. The market dropped drastically. And you see what happened here when the 7 moving average finally crossed the 25, the market went up. So this one here is the golden cross. When a small moving average is trading above the big moving average, it is a golden cross. And when it is trading below, like here, it is a death. Like here, the word death. And this is gold, and we are seeing gold. You know how expensive gold is? This is a golden cross. Forgive my handwriting, I'm a nurse, and you know we use legs, but never mind. That's how we write, guys. That's how we write, guys. So basically, that is how you use the moving averages in simple terms. I don't want to complicate these things. I don't want. So in case you find a death cross, observe the market until you see this golden cross, and when the golden cross happens, wait for one confirmation candle. That is a candle that closes above the whatever the golden cross, like you see this one, and then enter and enjoy profits Okay, so let's go to what we call the RSI, the relative strength indicator. And this indicator shows the overbought and oversold areas. It has 3 lines. It has the 6 strength indicator, it has the 12, and then it has the 24. The 6, it is showing the history, how the last 6 candles have been performing in a trade. The 12 is showing how the last 12 candles have been performing, and the 24 is showing how the last 24 candles have been performing, guys. So this RSI, it is good to use the 6, which is the yellow one, because it is faster. Imagine if I'm monitoring 24 people and you're monitoring 6, who will do the work faster? The one monitoring 6, because he or she has only 6 people in the moonlight and they can see them very easily and give feedback instantly. But the one with 24, it requires some time. So the 6 is the one that is fastest, and it is the yellow one. Then that pink one is the one of 12, and the purple one is the one of 24. Guys, we are here. This is the indicator. These are the things I'm talking about: 6, 12, and 24. You get it? Yeah, so we are there. So when you see it up like this one, it is showing overbought areas. And when you see it down here, it is showing oversold areas, and it is good to enter when it is oversold. And this whatever here, this indicator, it has the 100 line up here and the 0 line up here. You get it? So when you find it on the 0 line, it has been overbought and it is a good time to enter. And when you find it like up, like you see this one above 80, I don't stamp at enter, because it has been overbought, and anytime it may return, and get your legs there. All right, so guys, I just wanted to give you a brief detail, but let's see how you can use it in Royalq. Create as usual, and then tap trade settings, and then manually create here. Then we tap advanced options, tap on trigger price like we did in the MACD, trigger price, and then instead of choosing MACD like we did, we are choosing RSI. Okay, tap it and then it appears. And remember we said we are going to consider the 6 RSI because it is faster. And then we said that we are entering the market using the 15-minute time frame because we've confirmed it's a good trade. And then we are using the oversold area because we say there is great opportunity there and the coins are at a cheaper price each time they're oversold. And then we shall use a signal value of over 20. This means that we are telling the robot, in case the coin is oversold up to the 20 mark, buy for me, enter the market. So when it is oversold and it reaches the 20 mark, it will enter the market. But we have other options here on the oversold. We have greater than. So you can say I want you to buy when it's greater than 20. I want you to buy when it's less than maybe 80. You get it? So in case I choose greater than here, you see, I can say I want you to buy when it is greater than 20. I can even go ahead and compute and say no. Me, I want to buy when it is greater than maybe 40. Yeah, 40. I'm like, if it is greater than 40, buy. All I can say less than, and I say, oh, it is less than 50. I want you to buy if it is less than 50. That means any point below 50, the robot can buy. 49, 30, whether the RSI is at 19, it will buy because it's less than 50. Buy at oversold, not greater than, at oversold, and at a 20. Yeah, and then I'll say add RSI condition here, but this coin I'm not adding that condition. Add the RSI condition and then save here, save there, and then you're good to go. So guys, that is how you use the indicators, and only the MACD, KDJ, and RSI are in the robot, but the rest you can just use them as I've told you. So let's go to the pivot point standard. Alright, so you select a coin as we've been doing, then just scroll down like this. And then here we have indicators. We have so many indicators here. Yeah, but today I'll not go through these. You see them, all these are indicators. I have moving averages, technical indicators. Today I just want us to see pivot points here. And this indicator is good. You know why? It has a pre-drawn support and resistance. The pivot point is the mid point of how the market performed previously. So we have support 3, support 2, and support 1. Resistance 1, resistance 2, resistance 3. So in case you don't have time to draw resistances and supports in your trading view, those who have started technical analysis, you just come here in Royalq and use your pivot points to determine market entry. All we do is we are going to to compare the current price here, 21.66, with the pivot points here. So when we look at our pivot points right now, 21.66 is above resistance 3. It means this coin has overbought. It has overbought. So this coin has overbought compared to the previous prices. So I'm trying to look for a coin that will help me explain to you guys how to use these pivot points to enter. So you have to first set it first. So let me use the coin that is running. Okay, so I have XVG running and the current price, oh god, the current price is higher than the resistance 3. It is 0.010284. And this is higher than all these. Let me find a coin that is suitable. Alright, so JUP here must be suitable. So guys, this JUP is suitable, and guess what? It is suitable. So the current price of JUP is 1.1585, and when we come here, it falls here. It's not even reaching the support one yet. It has not even reached the support one yet. 1.1585. Oh, actually no. it's between here, the support one and the resistance, the support one and the pivot. So what I'm going to do is I expect that price to go from 1.1585 to 1.2133 to 1.2133. So I'm going to set my coin as usual, but I must set it before I put this. So I'll put sell here, and I'll put the market price here, which is 1.213, which we've seen there. And then we shall tell the robot, that is the trigger price we've set, and we shall tell it that sell 100% when it reaches that price. And it is telling me that if it sells at that price, it will give me a profit of 0.6280. It will give me a profit of 6280 depending on where I bought from. You get it, guys? So that is how we can use the pivot point standard to do manual sell, to do a predetermined price at which we want to sell. Alright guys, so that has been our training for today. I hope you got something and you got your favorite indicator, but make sure you use all these indicators in combination with one another. You see now I compared MACD to the volume, or now I compared moving averages to the volume. That's exactly how you do it. Compare one indicator with the other to get a perfect entry, and remember to take small profits. Avoid greed. Take small profits. So guys, subscribe, like, share, comment, and keep rewatching so that you learn more. Bye bye. Love you so much.